Ever wondered what truly sets smart investors apart from the rest? It's not just stock picking, it's not timing the market, it's asset allocation, the quiet, consistent strategy behind long term success. So, whether the market goes up, down, or sideways, smart investors know how to stay balanced and focused. But what exactly is asset allocation? Our financial expert, Mr. Ramalingam, is here with us today to explain it all in detail. So, Mr. Ramalingam, can you please enlighten us on this?
When you are investing, what is the asset allocation we have to maintain? When I say asset allocation, how much to invest in equity, how much to invest in fixed income, how much to invest in gold, how much to invest in real estate, based on your customized roadmap decide. You already have an asset allocation, right? You already have some real estate exposure, equity exposure, fixed income exposure, gold exposure. That is your actual allocation. What you have to do is ideal allocation. How can you move from actual to ideal over a period of time? That we have to decide. Because this asset allocation maintaining is something very important. I told you about within large, mid, and small, how do you maintain? Similar thing is what we have to maintain between other asset classes also. Say you have a long-term goal, and I am suggesting you to invest 70% in equity and 30% in fixed income. Putting all your money in equity may not be like the right choice. So 70% equity, 30% fixed income is what, let us say, we are deciding. You as an investor, you come to me in the year 2019. I tell you, you got 10 lakhs to invest. I tell you, boss, you invest 7 lakhs in equity, 3 lakhs in fixed income, and you have invested. Now 2020, we know what happened. Market crashed by 38%. So 7 lakhs equity could have become 5 lakhs. 3 lakhs fixed income could have become 3 lakhs 20,000. Now, if you look at between 5 lakhs and 3 lakhs 20,000, the ratio is not 70-30, it may be 60-40. So, technically, what do we have to do? We have to withdraw something like 70 to 80,000 from your fixed income and put it in equity. So, market crashed at the rock bottom. You are investing some portion of your fixed income portfolio in equity. That means you are buying low, you are averaging out. Now, this rebalanced portfolio will recover faster than the portfolio which is not rebalanced. In 2021 October, if you look at the same rebalanced portfolio to 70-30, because market moved from 28,000 level Sensex to 61,000 level Sensex. Equity has given 100% plus kind of returns. So if you look at the ratio, it will not be 70-30, it may be something like 90-10 or 85-15. 85% to 90% in equity and 10 to 15% in fixed income, because equity has overgrown now. Now, what we have suggested all our investors is reduce your equity exposure by either adjusting your SIP or withdraw from equity and put it in debt 70-30. So this way, number one, you avoid investing in equity at extreme peak. Number two, you are doing partial profit booking. So when the market is at low, you are investing more. When the market is high, you are withdrawing partially. So buying low and selling high is actually inbuilt default in this process. And on top of it, this process is inside out approach. You don't look at the market, you don't look at the macro signals like where is GDP, what US economy is doing, where the interest rate is getting. You don't see, you simply look at what is your ratio 70-30. Is it sizably dislocated to 60-40 or 80-20? Rebalance it. Simple. You are looking at your ratio and rebalancing it. That simple thing will help you buy low and sell high for some portion of your portfolio. You will be able to do it. Because we did that rebalancing, subsequently market crashed in October 2021 later, or January 2022 market crashed because of Russia-Ukraine war news. Market went down from 61,000 levels to 50,000 levels. Investors had a lesser impact. Already we have moved some portion of equity to fixed income. At the same time, we are not exiting equity here. Correct. This very simple, scientific, systematic way of asset allocation rebalancing will help you reduce your overall risk, reduce your downside risk, and increase margin of safety. And here there is no emotional consequences. If you are looking at macros, GDP, we don't know what is going to happen at the macro level. Say no one is expected there will be like tariff war, and we have also not expected tariff will be withdrawn or tariff will be reduced. So that way, if you look at it, it really helped all our investors when we did that asset allocation rebalancing. It really helped. So creating a roadmap and doing asset allocation based rebalancing, also goal based rebalancing. What do I mean by goal based rebalancing is you have a long term goal of 10 years. You have got a son or daughter like who wants to go for higher education 10 years from now. Obviously most of your money can be invested in equity because 10 years is a longer time frame. You have invested. Now it is 7 years over now. You have got just 3 years to achieve that goal. So 3 years is not a long term. 3 years is basically a medium term or short term. Leaving all your 7 years hard earned and compounded money in equity is not worth it. So last 3 years, don't invest more in equity. And also whatever the 7 year contribution which has got compounded in equity, slowly move it back to fixed income. So that in the last 3 years, you will not be at the mercy of the market. Otherwise, market crash by 50%, 38%. When it crashes, then like whatever the corpus, it can come down by 30%, 50%. It can be avoided. That is the advantage of having a goal-based rebalancing also.
Thank you for your detailed answer. If you have any doubts regarding this or any other financial decision, don't hesitate to book an appointment with our financial experts. The link to the appointment is given in the description below. Also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. Link to the webinar is given in the description below, and the webinar is absolutely free. So if you like this video, hit like, and if you're new to our channel, please do subscribe. Thanks for watching.